All right, everything looking good. Let's go ahead and do the damn thing. Get this party started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 11/6/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. All right, let's take a look. First and foremost, let's take a look at what happened with crypto over the weekend. So we see we did have a little bit of a pop up, kind of go sideways, and then come back down a little bit. Nothing too crazy happened, nothing really to write home about. Now, the most important thing and what we're paying attention to here is obviously we want to see this previous high hold right here around that 20,800 level, basically where we're at now. So essentially, we just want to have a move up and then a pullback to support, then another move up, then another pullback to support. So if that holds, we're well on our way to building a nice move up here to retest the previous high around 22,500 and then eventually up to 200 exponential and simple if we can continue to build strength. Here on Bitcoin, obviously we see we are printing the hard sell signal. We do have multiple red histograms in a row. We're still above the 8 and the 21 for now. So as long as those are holding, everything looks good. Part of the problem and what I didn't want to see happen though was essentially this issue right here with the 382. So if we zoom out here a little bit, get rid of our indicator oscillators and just kind of bring this on out here, we can see a little bit more of the macro picture. I wish we could see a little bit more of the macro picture over here. Okay, there we go. So basically we come down to the 236 first from the macro low, the bottom of the 2019, or I guess 2017 bull run, 2018 bull run, whatever you want to call it, when we peaked. And then we come down to like that 3,000 level. From that 3,000 level up to our essentially like 70,000 level. 236 lines up right here, roughly 33,500. And then the 382 is right here at 21,100. So recently, when we came down here, we bounced off the low, consolidated in the bottom of the channel here, and then we've back tested the 382. So that's good. It's definitely a good sign, but it would have been key to hold above the 382, to hold, at or above the heart line, and then likely we get that next move up to retest the top of the channel, to retest the 200s, and then also the 236 from high to low. So if we take from the high right here to the low right here, the 236 or 23.6% retracement of that move was the initial top when we bounced up here. And then we swept the lows once again, and now again potential to come back up here, test that top again. If we test the top again, we break through the 200s, the next likely target is a 382, and that's how we get up here to 30k. Now at this point in time, there's nothing telling us we're heading up to 30k, but we know there's a chance, and we know what needs to happen in order for that chance to get higher and higher. And so as we break through these key resistances, as we start consolidating above supports, the likelihood becomes more and more that we retest the 236, we get above that, we get above the 200s, we have a couple other little small steps in the way, and then our 382, etc. And then obviously we can see how that lines up with our macro 236, etc. So there's definitely a road to getting back into the 30s, but right now we're still far, far, far from that road. As long as the daily is above the 8 and 21, and there's still bull cross to the upside, this market doesn't look terrible. We still have momentum in our favor on the daily. TDMACD. Seeing a little bit of exhaustion here on the Jewel Thief. But all in all, so far been a fairly constructive move. I think the main issue that I see with what's been taking place right here is we bottom right here. That's been our macro low so far, under 20k, around 17 and some change. We move all the way up to the top of the range and topped out around 24k. And then we came back down to the bottom of the range and essentially got back down to that same level again. And then we've moved all the way back up to the top of the range once again. And this time when we moved to the top of the range, when we entered into the bullish control zone, we topped out substantially lower at 21k. So it's still possible this move continues. We still have legs and we can get back up to that same level again at least. But the main issue I have is when we go all the way from the bottom of the range to the top of the range, to the bottom of the range, to the top of the range, and we're not really going anywhere, the trend eventually is going to take back over. So basically we're in a situation where if the bulls don't show up, the bears will take back over. So the bulls have showed they're still alive, but they're not doing anything really constructive at this point in time. Not anytime, not in a reasonable amount of time. I mean, you could say, well, this is constructive because we've been carving out a bottom, for the last month while we went sideways. Sure, we've been using up a bunch of energy to hang on to support. That's how I look at it. So eventually what's going to happen is, we're at the top of the range now. We've been going pretty strong here for a while. If we don't eventually get a solid move back up here, a constructive move, we don't want to just see one big candle up. We want to see a slow grind back up and then a series of higher lows. We need to see constructive, support being built in the markets. And to tell you the truth, that's not what we're seeing so far. So, I don't want to be overly bearish when things are pointing towards at least some short-term bullishness. It is a good sign on the weekly. We got it back above the 8. Likely we test the 21 next. Again, 22,000, lots of confluence. Bunch of green histograms are above the red slope line, approaching the 0 line. Again, coming out of the bearish control zone, hard buy signal. We're seeing some potential signs of strength. Now, it's really weak strength, but it's strength nonetheless. The question is, are we going to use up all our energy going sideways, hanging on? Right now, we're on the edge of the cliff, and we're hanging on by just our fingers, hanging over the edge, okay? So the bulls are basically what's keeping us hanging on for now. And if the bulls are strong enough, maybe we could pull ourselves back up off the edge. But if not, eventually, the bears, like in one of those old cartoons, going to come over and like step on one of our like toes at a time or whatever, like poke us with something sharp until eventually, I said toes, but I meant fingers, until eventually we lose our grip and we fall off the edge. So that's how I look at it. You could say, oh, well, we're hanging on, so that's cool. We're carving out a bottom because we're not going lower. I look at it the other way around. I say we're using up all our energy just hanging on. We need to climb back up off the ledge and try to potentially carve out a bottom and build some actual support. And that's just not what I see happening right now. Now, when and if it does, by all means, I'll be super bullish. There's definitely some signs that we're potentially trying at least the bottom, which is good. But there's also a lot of signs that, we're basically just buying time before the next big fall. On the monthly, still looks terrible. Again, it is good that we're not consistently like putting in lower lows. I mean, we did just put in a lower low, but the last month closed at least green. That's a good sign. All the momentum indicator oscillators look terrible though. So I guess the real conclusion is, watching the lower time frames is the most important thing right now. On the 4 hour, we're above the 200s. So, we're back here retesting these previous highs. And if we go to a shorter time frame, we can even see, and I don't even like bringing up these short time frames on stream because anything could happen in the next few hours. But, we've been in a bull trend on the 1 hour for a while now. We retested it. We threatened it. We flipped it bearish right here. And then we were able to reclaim that level. And now we're coming back down to retest the 200s again. So let's see what happens. But we know when the 200 simple cross above the 200 exponential, we often go in to put in a new cycle high after that, followed by then we actually top out the trend. So there's definitely some signs of exhaustion on shorter time frames and the potential that we could have a deeper retrace. My opinion right now, the 4 hours is the most important thing. Eventually we're going to come down here, either test right here, find support, and then we can go higher if it holds, or we're going to test down here and retest these previous two lows and the 200s, and then we can go higher if they hold. But at this point in time, we don't know what's going to happen, and we know there's some clear bearish divergence here on the 4 hour. We have a lower high here on the histogram than this previous high right here, and we clearly have a higher high on price action. So, what does that mean? What's that going to amount to? Are we going to get a deep retracement? Are we just going to get a little pullback? Essentially, we have to wait for the market to decide. I think we'll get a little more clear of a picture when we take a look at Ethereum, though. As Ethereum did exactly what we said. So we came up here, we almost touched the 200s multiple times, and you guys know the prediction was essentially one more push up here higher, a higher daily close, and then the print of bearish divergence. So here we see on the slope of the TDMACD, we have a high, then we have a clear lower high and multiple red histograms as we roll over, printing bearish divergence at the 200s. So you guys know I said in advance that we'd be shorting that level. This is a textbook play. You're in a bear market, you retest the 200s, you re-enter your short. I mean, that's essentially just the playbook. It's the same as in a bull market. You have a pullback, you retest the 200s, you buy support. So then here on the Jewel Thief, again, we see a high. We see the knife was through the freaking roof right here. We see a high on the stochastic, and then we see a breakdown, hard sell, back test, lower high. Again, bearish divergence on Ethereum. And what looks to me like a clear top, at least for now. So we'll see what happens. I do say things like, I don't want to, short the strongest or long the weakest. But sometimes, when the occasion presents itself. So total market cap, weekly crypto. So we're just, again, just trying to carve out a bottom on the 200 simple. We have resistance at the 200 exponential. As far as I'm concerned, as long as we're between 921 billion and 1.0, it's like 6 trillion. We're just range bound, deciding what's going to happen. On the weekly, though, bunch of green histograms. Stochs they cross back negative, but they're trending they're trying to cross back to the upside. Right now, this looks super neutral on everything except for a bunch of green histograms above the slope line. Looks good. It looks good, honestly. That does. Everything else is like pretty neutral. And just, again, the trapdoor, in my opinion, is just looming. And you're like, well, what if the trapdoor just never comes? Well, I mean, at some point in time, it's not going to look like there's a trapdoor just waiting to fall out below us. So eventually, okay, the risk goes down and therefore, the reward goes up substantially. So Bitcoin dominance on the weekly, this is everything. We're at the lows again. So we're showing altcoins are basically the strongest they've been this entire run up. So over the last 4 years, 4-year cycle, whatever, this last bull run, relative to Bitcoin, the alts are the strongest they have ever been. Now, there's definitely some alts that are down 99%, and there's some alts that are down 50% or less. And then, the average is somewhere around like that 40 to 60 level. But the fact of the matter is there's still an equal percentage of money in altcoins and stablecoins as there is, relative to Bitcoin, as there was at the peaks. So people are, in my opinion, they're confident in their altcoins. They're confident the market cycle has bottomed and we're going higher. That's the only way you can explain this amount of money. And then especially when we look at, we take out the stable coins and we're not all the way at the bottom. So there's definitely some more people seeking the safety of the stable coins. But again, I think a lot of that is just speculation on dollars. And the truth is, relative, Bitcoin really is the boomer coin. It is what it is. I'm not hating on it or anything like that. I'm just saying, there's a million other flashier, shinier, newer coins that people are interested in. And when I say coins, I mean digital securities. Hey, what's going on, Todd? Good to see you. He said, what up, Big Cheese? Parag in the house. What's happening, brother? Good to see you. So TNX, let's see what happened here. So essentially, we finish out the week okay. We had a pretty strong bounce, gap up, consolidated above the 8 and 21. Still looks good. We're literally like 1 or 2 candles away from cycle highs. Definitely still looks strong. If we were to push up here, lose momentum, this could roll over. But right now it doesn't look bad. Right now it looks like yields are going higher, which makes sense, obviously, because with the Fed's most recent, hike, it really does make sense. So. Oil, so we saw another push up here. We did get back to what's so far a lower high, but it's back to the 200 exponential. You guys know my target is still 200 simple, up here at about 100. We don't have to get there. Seems probable at this level. We're at 91. It's only a 10% move from where we're at. We're holding on to the bottom of this channel here. The heart line and the 200 simple are going to line up right around that level in just a few days. Somewhere around like November 9th or 10th. Seems likely we hit it right around there, and then we can kind of see what's happening. But that is definitely still the target. I do think oil could potentially roll back over and go down into, the high 60s, low 70s. There's definitely still a possibility. That's still my base case. Does it have to? No, it does not have to get there. If it doesn't get there, we'll reassess, obviously. We'll see what happens when it pushes up here, honestly. BIX coming down out of that range once again. So we talked about this multiple times. Obviously, we had the breakdown here and then went to essentially retest the highs again. So it's not crazy to think we could come down here, put in another higher low, even though we're outside of, this bottom support. So as long as we're above this 20 level, we're still putting in higher lows. Everything looks fine. For right now, it looks like consolidation, looks like a potential breakdown. And that's the real level to watch. So the same way when we came down here, we broke out of the pattern, but we didn't take out that previous low. You could argue that we're just going to do the same thing now. So we're just going to move the same support line to the previous low right here, and then we're going to watch that for a swing. So now it's 1959 on the VIX. I also talked a lot about how the VIX could potentially, kind of be losing its luster in the sense that right now options are dictating in many ways the markets, and short duration options, aka gambling, a week, 2 week options are like extremely popular. Short duration stuff, extremely popular right now, and big, I don't even call those trades, big bets being made. And that's just not going to be reflected in the volatility of the VIX because it is, 30 days out. Dow Jones Industrial, backtest of the 200 exponential and simple, holding for now. We do see some signs of weakness, couple red histograms. We are seeing the Stochs powerfully angled back down to the downside, potentially looking for that cross, looking for the exit of the bullish control zone. Likely would correspond, with the top, the same way we saw that same correspondence with the last few tops. So, obviously we had a pretty big bullish control zone exit. That was the macro top. Then bullish control zone exit. That was our next double top. And then we see bullish control zone here, exit at the 200s the last 3 times now. And then we're setting up for the same thing again. So is it going to do the same thing again? Probably, especially at the speed at which it got there. We do know the longer time frame Dow Jones chart, though, is painting, what looks like a rosy picture. Like, hey, there's a possibility, we get through this thing. There's a possibility it's not over. We're back on top of that 8 and 21. We had a powerful bounce off the 200s. The problem is we have a lower low, we have a lower high, and, we just saw this story play out multiple times where it looks good and then we get rejected. So did the bullish divergence between these two lows already just play out? Probably. But the Dow Jones definitely painting a picture for some potential that, hey, maybe the worst is done. Do I believe it? No, but I wasn't born yesterday. So SPY on the daily, a much weaker move, halfway the move from the low back to the 200s, probably painting a much more accurate picture as to what we should expect. Triple Q's pathetic down here at the lows, literally at the lows. So, we saw Dow Jones bounce powerfully all the way back to the 200s. We saw the, Russell somewhere in between. We saw the SPY halfway, and now we see the NASDAQ Triple Q's essentially has rolled over completely. Looks absolutely terrible. And then the Russell, obviously, basically the backtest of 200s, a little stronger than the S&P, a little weaker than the Dow Jones. This thing has been by far the biggest underperformer, and we can understand why money is flooding into this. It didn't take out the low right here. People are still really, really ambitious. That small cap growth is going to lead us out of this thing. I'm not saying it's not going to lead us out of this thing, but we don't literally, what's a good way to put this? You don't literally start a race or a marathon and just immediately start thinking about I can't wait to get to the finish line. No, you go through the processes of, your body breaking down and exhaustion and cramping, and, you got to go through all the pain, and then finally you see the finish line and you're cramping up, and, you got huge blisters on your feet, and you're, starving, and you're thirsty, and your stomach's bubbling, and you might have sharded a couple times on the way, so hopefully nobody gets too close to you. It's grueling. It's grueling. Trust me, I've done, never a full marathon, but I've done some pretty insane ones, and you got to dig deep on these things. That's what a bear market is like. This isn't a fucking, nobody's digging deep right now. You're like, yeah, but this stock is down 92%. Yeah, but you bet on the guy who was out drinking the night before. Of course he's not going to finish a race. Get out of here with that shit. I'm talking about healthy competitors. XLE, retesting the high. Got to be real careful of a double top right here. But, everything is pointing towards we're at least going to see some kind of pullback. The real question is, from that pullback, what happens? If we come down to 84 and find support off that previous high, and we're just consistently putting in, higher lows, XLE is probably going to soar. And, we could see oil prices continue to come back down and XLE still do wonderful. Just because, realistically, as long as we're above, as long as we're above 50, 60 bucks a barrel, these oil companies are killing it. So XTN next, transportation, extremely, extremely weak. Obviously, we know that. It's definitely a big deal. Semiconductors, extremely, extremely weak. Just back testing previous supports. You could argue that they're trying to do some bullish stuff here, but Look, anything that hasn't retested the 200s at this point in time, like a lot of stuff has already moved. So you're basically betting on the underperformers just kind of catching up. So if we're going to do bullish stuff, I would rather bet on the winners than the underperformers just catching up. Because as the underperformers are trying to catch up and get back to the 200s, the winners are going to be soaring. And by then it's like, oh, okay, so you're betting on the three-legged horse because the odds are good while everybody else is just running laps. No, I'm good. XLU, so we're trying to reclaim this level. We're back testing it for now. It honestly could go either way. Such a violent move down, you would expect a reflect bounce. The real question is, can we reclaim these key support levels and then just continue back higher? Because if we do, we probably retest the highs. If we don't, if we see a rejection here, again, we'll probably sweep the lows, and I suspect we're going much lower, probably to like about 58. XLP, consumer staples. So you guys know, obviously, these are the safety sectors. This has officially confirmed into a bear market. We have three, what amounts to lower highs, and then, a series of lower lows as well. And then we're just now getting rejected off the 200s and officially confirming into the bear market. So a lot of stuff's already been in a bear market, and people are trying to say the bear market's over, it's time to go higher. Some of these, stocks and indices are just now confirming into the bear market. So I don't think it's likely that the strong stuff is just now saying, okay, we're officially bearish. And then the weak stuff is like, oh no, we're already done being bearish. Like everything's just going to soar now. And now everything else is, oh, okay, yeah. So I guess we're not in a bear market. We'll just go up. It's wishful thinking. It would make mine and everyone else's life a lot easier. It's much easier to make money when you can literally just buy anything and it goes up. But that's just not reality. And keep in mind what led to that scenario, what led to those all-time highs, and then tell me, hey, is there fiscal and monetary looseness? Okay. Fiscal and monetary wise, the amount of looseness, the loose money going on, is literally like nothing we've ever seen in the history of man. So the probability of us getting back to the same highs without seeing, 5 or 10 or 20 trillion dollars pumped into the economy doesn't seem likely to me. You can inflate a bubble really, really big, but you still need the same amount or more air to go into that bubble to inflate it again. Otherwise, you just end up with a bunch of just excess skin, like somebody that lost a bunch of weight. It's just all like limp and stretched out. So just bask in that visual picture for a little bit. So DXY is next. Obviously, we came down here. We retested that ascending support. Key levels, very, very important levels. Extremely weak close on the daily and also the weekly. We were able to reclaim the 821, and then we got bearishly engulfed, just a complete smackdown. Smacked like the bitch that it is. The DXY definitely under pressure. What does that mean, though? We retested support. So do we go lower here? Or do we go higher? Well, we saw the indicator come down from the top level all the way down to neutral. We saw price action basically go sideways. We're at support. We have another key support down here at about that 108 level, which has been our price target now for some time since we basically topped out here. So, do we get that? Do we get another series of lower highs and lower lows and step down here to 108 before finally going higher? I think that's the most constructive thing that could happen if we hold this ascending support in white, though. Not crazy to think that we're just pinching into a little, consolidation pattern before we burst to new highs. On the weekly, again, still very strong. We do see that rejection, though, basically smacking price down below the 8. So that is a big deal. The likelihood of retesting in 21 seems the most likely yet since our test back here in February, March area. And that puts us again around 109. So the 108 does not seem far out of reach. It's also a back test of this. It's a back test of those key fibs. Still looks very, very powerfully uptrend to me. But in the meantime, that's 4 weeks in a row. Red histograms, hard sell coming out of the bullish control zone. A breakdown from the 8, a back test to a lower high, and then complete smackdown for the weekly close. If there was ever a time when we see some weakness in this, we had a similar situation here and here, but I think this is the most promising if you're begging, praying, hoping, wishing for that DXY pullback. But the truth is, when it pulls back, you're going to have to make a tough decision. Hey, is this a top and it's time to double down on my losing trades betting against the DXY this whole time? Or is it time to deleverage and get the fuck out of the way before the DXY goes higher? Because the truth is, most people are probably going to be like double, triple, quadrupling down instead of doing what they should do, which is delevering, as the DXY has confirmed into a macro uptrend. And our monthly is, again, very, very strong. We see a little rejection here. We see some indecision. And then we see this monthly candle so far is under pressure, but still very, very strong on every other metric. So, is the DXY weakening short term? Yes. But again, I mean, we could push up here and one day from now, be taking out 112 and then headed towards the new highs. So again, last thing I would be doing right now is betting against the DXY because of fundamental and technical reasons. If anything, I'd be looking to de-lever my upside down or losing trades. Obviously, I don't have those because, DXY obviously is fire. So Tesla is next, threatening the lows, looking like trash, ready to break down. This thing's probably going to 179 this week, so get ready for 179. Seems very, very likely. We've tested this low so many times, just hanging out here under pressure. Tech was just getting bent over and railed, and not in a good way. Microsoft next. We'll take a look at the magma stocks. Definitely not the mama stocks. So Microsoft leading the lava down the hill. New lows. We did get a little pop off the lows, but I mean, let's be real. This thing is just in the middle of the meltdown. The only reason we stopped is because we hit our next target, the 0.5. And of course, once again, nailed it. We talked about the potential now for that backtest entry for the retest of 200s. Obviously, tech just getting absolutely destroyed right now. So is that it? Is it time to pick the bottom, catch a knife, and roll with this? Possibly. We'll definitely be keeping an eye on these this week. So Apple threatening the lows once again. So it played out perfectly. We talked about the scenario right here. Obviously took some profits on the way down at our initial take profit level, 17% in. Then we got the dead cat bounce, as expected, back to the 200s where we got rejected. I laid it out for you guys in advance. If we start to close back above the 200 exponential and simple, the slope starts to flatten back out. It looks like there's potential of them flipping back blue. We're exiting. We're getting back out, slightly in profit. Instead, the opposite happened. As expected, we got rejected. People re-entered their short position or doubled down or tripled down or quadrupled down, whatever it is. And now here we are back at the 236. When and if we lose this level, the next area we're looking at is 114. 114 on that sweet, sweet Apple. So here we lost the 200s. We pushed back up to another lower high. And then here we back tested, got rejected at the 200s. So again, we know the formula. We've talked about it a gazillion times. We get back test, we fail, we go back down, we get rejected by the 200s, we head to new lows. So the previous low was 130. So I'll see you below 130. I'll be the guy holding the sign that says, "Told you so." Google is next on the daily. A little bit of that G and magma back testing the 0.5 as we broke through it. Again, these things are just getting destroyed right now. Almost hit the measure move for the leg in of our bearish continuation pattern. So right now it's looking something like an ABC kind of correction deal. We almost got to our target. We overshot the 0.5. Obviously that was the area we were looking for, somewhere in between the 0.5 and the 618. Could that be the bottom? Is that the bottom? Are we ready to just turn up? Here's the problem, okay? If everything rolls over now and the tech stocks were just leading the way and, like the industrials were just kind of lying to us, these are going to get wrecked. The weakest is just going to get even weaker. So we'll see. Now, keep in mind also, we're towards the end of the year. A lot of this stuff in tech could be tax loss selling. So if you were a loser and you've been just riding these things, or you know what? I'm sorry. You're not even riding tech anymore. If you are holding these things on the way down, they're riding you. You are getting barebacked by Meta right now. So Mark Zuckerberg is riding you like he stole you, so to speak. And again, I don't know what you're into, but not in a good way. Looks terrible. I think a lot of the weakness, and we talked about this in advance, expect to see extreme weakness in things that have been weak. And what is the most wrecked? Profitless and, garbage tech, even big tech. Why is that? Well, the people that have just been hodling the tech or buying the dip that are now down 20, 50, 90%, they're tax loss harvesting. So they're essentially using those losses. They're realizing those losses to essentially save themselves money on their gains, assuming they had any gains. I'm assuming if you're just hodling tech down from the peak of a bubble, that probably all your trades are losers. But, you can roll that into the future, obviously, write off an extra like 3,000 per year for the rest of your life. I'm sorry, that's not funny. But anyway, so here it is. We're seeing the weakness. We're seeing the continued weakness. We're seeing these things melt down through support. Now, the target, 82. We're at 90 right now, down from 380. There's a strong argument. There's obviously some value in these things, but the same way they could be overvalued on the way up and, this bubble inflates, they can get way undervalued on the way down. So I'm not saying Meta at $90 isn't a good deal. I'm just saying that it doesn't have to stop there. It could easily be at 45 and just be an even better deal. So I'd be real careful with these things, but there is definitely, in my opinion, in my humble opinion, there's definitely a lot of tax loss harvesting going on here. And that's why we're seeing these weak stocks get completely crushed. And we're seeing those flows back into energy, back into oil, back into commodities, a lot of the winners. So again, in my opinion, a lot of this is tax loss harvesting as we approach the end of the year. Amazon just completely melting down, just absolutely disgusting. So we hit the 886. Brand new low. Congratulations. New lowest low of the entire cycle. Oh, you did it, Amazon. You're a piece of shit. So yeah, you're doing like, hundreds of billions, trillions of dollars in business, and losing money. Congratulations. So we talked about the situation where Amazon could actually lose money for the fiscal year. It's definitely still possible. The numbers came in exactly what we expected. So we have 2 losing quarters. We have 1 winning quarter. The 1 winning quarter is less than the bigger of the 2 losing quarters. So the next quarter that comes in has got to outdo the other loser and part of the other loser. So, let's see what happens. Obviously, Q4, Christmas, all that stuff. There's definitely some potential for a big burst in Amazon sales. But, I would not be surprised to see Amazon lose money this fiscal year. And if they're going to lose money, what does that put their stock price at? It's tough to measure, obviously. We know once we hit that 886, there's possibility of at least a short-term pivot or a bounce or something, reaction rally. But the truth is, the probability of a pivot, like an actual low there, is like less than 5%. So it looks like we're going $81 on Amazon. No big surprise. And then after that, we really have to start looking at like $65 fucking dollars, which again, all that is just, a repeat of that first leg down. So don't be surprised to see these big tech stocks, even the profitable ones, even the big ones, even the ones that actually matter, not ones that change your name and potentially, destroyed their whole entire business, for various reasons. Don't be surprised to see them going substantially lower. And again, you might see the same thing. I don't know what's going to happen on miners. Maybe it's already priced in, but like gold miners, cannabis stocks, all that stuff. If you've been a loser this last year, don't be surprised if people are selling down those losers and realizing those losses. Now, it doesn't mean they're not going to get massive pops back to the upside as other people try to buy the dip on these things, which we'll talk about China here in a little bit. So gold, XAU, very, very pathetic. We did finally see a reaction rally from gold in response or, counter response, whatever you want to call it. Like inverse to what we saw in the DXY, which is good because a lot of the times lately we've seen weakness in the DXY and gold didn't even move. Here we at least see a powerful move in gold. We see potential to cross the daily 821 back up. We saw obviously a little bit of building of strength here. The histogram, a couple green ones now, and we're flipping the slope line blue. Looks like gold's going to try to push back up here to like 1760 again. Retest. There's also a possibility people are just saying, hey, look, gold's down quite a bit from the top. A lot of other stuff's getting wrecked. I'm going to tax loss harvest. I'm going to move some stuff into, digital gold or contracts or, speculate on gold temporarily. A little bit of store of value action, and then we'll see what the next trend is. Because people got to put their money somewhere. A lot of that money is actually flowing into bonds right now, but, mostly short duration, obviously, because, we don't know what's going to happen in the future. You don't want to lock in a 10-year at 4% if we're going to be at 6%. So silver is next. So XAG, again, nice little move here. We did make it back up to the 200 exponential. It seems like we're going to the 200 simple. So we have our target still up here. Same thing. The measure move, the 200 simple. A lot of stuff between that 2150 and like 2250 level. But again, silver looking very, very weak still longer term. GSG, so this was a big move up here. We obviously got back up. We took out that previous high, which is definitely big. Now that next puts in our high at 2351 as a target. And then again, we have our internal retracements for the fib from, oh, I need to adjust this. Oh. From our high to low right here. So we hit the 236, shot up to the 382, didn't quite get to the 0.5, back tested 236, made it to the 382, burst through the 382 and hit the 0.5. So it seems likely we're going to potentially test the bottom of the range again, the 382, and then eventually make our way up to the 618, which it looks like would be a pretty nice area for this to top out. The knife is pretty aggressive right here. We have definitely some confluence at this 2384 level. Seems likely to me. LNG, Cheniere Energy, so pretty aggressive selling. Still a bearish engulfing candle. Did get bought up pretty aggressively too. So we saw some bearish divergence print. We were expecting it to roll over. Pretty aggressive move down. The bulls did come in and buy it up. So we'll see what happens here. More likely than not, seems like we're coming down to retest around 150. At which point in time, that's going to look like a buying opportunity to me. MOS, Mosaic Corp, a little bit of that fertilizer breakdown. Again, looking like it's rolling over a series of lower highs, but we do also have higher lows for now. So this looks technically like a consolidation with a slight bullish edge. I don't like that we're below the 200s. I don't like that the 200 simple is on top, but I'm not quite ruling this out just yet. Doesn't look great though. Does not look great. URNM, again, still below the 200s. Looking like these things are rolling over. Let's look at our weekly time frame here. Again, very, very crucial area we're barely hanging on to for now. Probably close to a pretty aggressive move in one direction or the other. With a series of lower highs and lower lows, seems most likely that we're coming down here to put in a new low. So I'm expecting URNM in the mid 50s. And CCJ, same thing. Looks like this thing's about to roll over. If we look over here at the weekly, just a retest of the 200 exponential is about 18 bucks. 200 simple around like 16 or so. Still very, very aggressive. I love the way this chart looks. It looks like we're going into a long-term uptrend, but it seems like after a bunch of times getting bought up off of what amounts to probably like the 50 moving average or somewhere around there, it looks like we're due for a little retest of the 200s. We'll see how aggressive the buying pressure comes in and where, and look for a bottom. What I'd like to see is basically either a retest of key support, one of the 200s, and a pretty aggressive buying wick come in, at which point in time I'll be looking for to reload positions for long term. I'm still very, very bullish on uranium and nuclear. So Tilray still playing out that little move right here. Looks like we're probably going to get the top of the channel and the 200s. I was looking a little shady there for a minute. Looked a little reckless that we didn't take profits, but it is headed back up. Momentum still in its favor. Again, these sold off pretty aggressively for like the last 4 years straight. So maybe the tax loss harvesting already has taken place. Nice little burst up right here. I would just be careful because every time we get a move up here, there's just going to be countless people looking to sell into this. Definitely not looking to jump the gun on the pot stocks, although I am very bullish on them long term. So Alibaba on the weekly, we saw a nice little bounce up here. So we saw indecision at the lows, and then we saw a pretty aggressive buying coming in all the way back to 69 from about 59. So almost a 15-20% rally there. Definitely a good sign, some life. But the truth is, again, I mean, what did we do? We just came down here, retested the lowest low ever. So you would expect a dead cat bounce and an attempt to hold that area as support. But obviously this chart looks like complete trash. I mean, China just in general looks really, really bad right now on the daily. I mean, there's just, when I look at this chart, I don't think, wow, look at all that value. I think the opposite. Like, oh, okay, I'll meet you at 0 and then we'll talk. And not literally all the way to 0, but I mean, come on. It's a race to 0 in China right now. So NEO is next. Again, very aggressive burst up here off the lows. we don't know what's going to happen to earning. A couple days away here. Again, came all the way down to like 850. The target was 8, so we didn't quite get there. Made it in the 8s, but not to the 8. But since then, has bounced like, I mean, depending if you bought the absolute low, like 40 to 50%. Very aggressive bounce. Would have been a nice scalp, obviously, if you're good at picking bottoms. We did see there was some key support around these levels. There's definitely a reason. Oops, sorry. There's definitely a reason for it to bounce. This was definitely a target that we've been looking at for a long time. But again, that one little wick down here and a little pushback up, is that going to be the macro bottom? I mean, your guess is as good as mine. All I'm looking at is basically the 1, the 2, the 3, and then a deep 4. As long as it doesn't come down below the 1, it looks okay. And that's like as low as like, $5. So does it get there? I don't know. You guys know long term, I have extremely, extremely bullish targets up here in like 250 range based on fib extensions and a potential fifth wave. Does that have to happen? No. Does this thing ever go back to 250? Is it going to like 25x from where it's at right now? Yeah, I mean, probably. Probably. Timing's obviously the hard thing. Is it going to be in 5 years? Could you have better deployed that capital somewhere else? EWZ, Brazil. So we saw a gap up here back above that key fib level. This is what we want to see for a likely push up here. Maybe it comes down here, fills this gap. But whatever it does over the next day or two, I mean, it's going to look real, real likely if we hold up here that we're coming to that $42 target. So looks like we got another nice little move and some continuation in the books here. Was hoping it would get down a little lower right here and retest that key support. Didn't quite get there. But when we put in this series of higher lows, it definitely started looking like it was ready for another leg up here. So Roku. So obviously this thing is complete trash. I mean, like textbook as it gets, double top right here. I mean, some pretty clear double top followed by, a clear bear market. This thing is brutally far away from the daily 200s. Just absolutely wreck city. And it looks like it's setting up for another leg lower. So what do I see when I look at this Roku? I mean, it looks like a hot pile of garbage. I mean, it looks to me on the weekly like we just went on a parabolic uptrend, arguably, 5 waves. Depending on how you look at this. Yeah, I mean, it like follows the rules pretty good. So we have a 1, we have a 2, we have a 3, we have a 4. And when the 4 comes down, we notice that on the weekly time frame, it doesn't ever close below the 1. So even though the wick comes down here, we don't close the longer time frame, the weekly candle, below the top of the 1, which is a rule. We can't violate the 1. The idea being that as we go up, we build support and the previous high becomes key support to put in the new low before we go higher. So then the next thing we need to see is, the difference between 1534 and the top of the 1, which was $76. So we just need to make sure that, this roughly, what, maybe my addition. Oh, and 76. Yeah, okay. So it's like $61 roughly was that move. So we need to make sure that the move of the 3 is at least that much, which obviously it is. We're on a log chart, so they look about the same, but this one was 150, so it's like over double. And then the third or the fifth wave doesn't matter because we have a 1, then we have a longer. The 3 is longer than the 1, so that means the 5 can be either longer or shorter. It doesn't matter. As long as the 3 is not the shortest, it's often the longest, but sometimes we get a truncated wave 5, aka, a parabolic move like this. So now we have 5 clear waves that have followed all the rules on the way up, and now we're retracing those 5 waves. So if we go from all the way to the macro low to all the way to the macro high, and then we look at the fibs, well, we just lost the 618. We lost it, we back tested it, and we got rejected, and we closed at new cycle lows on the weekly. Now, there's like 4 weeks in a row we've closed at those lows. Well, one of them's open, but 3 closes. So does that area hold up? Could go either way. The truth is, though, the last thing you want to see is the 618 of a macro 5-wave structure get violated. I mean, this is going back to 2017. And again, this is the real danger we have to look out for on crypto. Because this is our first 4-wave cycle. This is our second 4-wave cycle. This is the blow off top, or double top, or whatever you want to call it, that we just have for Bitcoin. So right now we're still in the process on crypto, you know, and this has nothing to do with Roku, obviously, but in the process right now, crypto is still, let me switch this over actually to, I'll make it white so it shows up pretty clear. We're in the process still of correcting the bull run from the lows of 2019 up to the highs of, you know, last year, this year, last year. God, I can't even, from when we double topped on Bitcoin. So now that we're pulling back, you know, we're basically in the middle of this macro pullback to the 382. I'm sorry, to the 382 in white right here. That's like where we're at right now. So if we break down from here and did the equivalence, you know, what this is doing is this is taking out the equivalence of the 2019 lows. So this has essentially violated, if this was the Bitcoin chart, this has violated the $3,000 low from 2019. Very, very bad. But you could see how in the process, you would think that we're only correcting wave 5, and then we keep correcting deeper and deeper and deeper, and then eventually we break through the 786, and it's like, oh, we're about to just lose that whole entire thing. And then next thing you know, it occurs to the market, oh, wait, hang on. This whole entire time, we've been correcting the entire 5 waves, not just the 5th wave. And that is the true danger. You know, because a lot of people were buying Roku at the 236 or at the 382 or at the 0.5 or at the 618. And now, you know, they obviously look like fools now. You know, but most people are buying based on the 5th wave only correction. So dangerous, dangerous thing happening in some of these markets right now. And, you know, essentially just saying, hey, look, this is what could happen to your favorite asset after a parabolic bull run. So what's going to happen to this next? Well, if it doesn't reclaim the 618, it's going to the 786. And again, it's possible to bottom at the 786, but I mean, this is disgusting. You can't even really pull any kind of correction off this. Like, we can't call this like an ABC correction or anything. I mean, there's nothing here. It's literally just a straight line down. So, I mean, realistically, I mean, god damn. I can't even imagine being the type of person that could legitimately be as wrong about as many investments and still try to tell people with a straight fucking face that their strategy is okay, or that, like, hey, things are going to work out. We gotta stay the course. Like, I mean, if you're down that much, something broke. Okay. If you don't want to admit it's your strategy, that's fine. Something broke somewhere else and you just didn't account for it. Like, reassess. If you go to a, you know, a sports game and one team is down by, like, you know, let's say you're playing basketball, they're down by like 50 points. I mean, if it's like 50 to 5, you know, or even 100 to 50, like, maybe reassess. Like, you're not just probably going to, like, come back suddenly all of a sudden. Maybe time to, like, change it up. Change out some players. Change out a coach. I mean, I know Kathy got dropped by a couple of people, but damn. I mean, just absolutely pathetic. Roku's just clear trash. I mean, look at this fucking meltdown. Jesus. Ugh, I can't even imagine. I feel bad. It's not like we haven't been warning people the whole time. All right, let's speak about something that looks good here. We got cheese in the house. Chili cheese dog. Stuffing those buns, if you know what I'm saying. Taking out the swing high right here. That was crucial. That's what we talked about. Now, technically, hasn't happened yet. We need to close like this daily, above it, whatever. But we're threatening it right now. And it seems very, very likely. Higher low, and now we're putting in a higher high. Looks like this thing wants to move. And we know if we take the internal retracement from the cycle high to cycle low, that's us bursting through the 618 on our way to the target. The big old target of 38 cents. That's right. You heard me. 38 cents. That's almost a $half holla. I mean, 50 cents, but I mean, well on the way. Well on the way. So yeah, I mean, chili cheese dogs looking good. Looking good. Algo. Okay, so it's having some trouble here. Obviously, some other people are looking at this neckline, this little curved neckline. But we know, obviously, breaking through that 200 exponential was a big deal. Sorry, 200 simple was a big deal. And back testing 200 exponential now. Trade setup played out for, like, I mean, if you sold the wick, you got almost to the 28%. Obviously, most that's back gone now. It's still up like 16, 17% from the entry. Still looks good, honestly. And, you know, taking out this level, we wicked up above it a couple times, got rejection. But it seems like it wants to rip right here. So if we make it to our 236 target at like 46 cents, then we can start looking at a real potential legit breakout of this downtrend, and something like 64 cents. Now, it's still a little early for that right now. We don't want to get overly confident. I still want to take some of our profits here at the 236, but tagging the 236, which we technically already did right here, tagging the 236 at least again, seems very, very likely we're headed up to 382. Now, does Bitcoin and crypto and everything else, suffer from exhaustion and it starts rolling back over and we get crushed, and then all this just goes to, back to bearish? I mean, there's definitely a very, very strong, very high likelihood that's what happens. All these crypto trades look like they're ready to just give everything back the second that the markets roll back over. So keep in mind, the markets have been very, very correlated lately, and crypto suddenly had a little surge, counterintuitive to what we saw in the NASDAQ, but right in line with what we'd expect, an inverse move to the dollar. So the real outlier here appears to be tech, because we saw risk on have a nice move when the DXY came down, which is normally what we would have seen tech do as well. But tech diverged there for a bit, and crypto kind of did what it was supposed to do, and tech kind of failed there. So one of them is going to get back to normal probably, assuming we didn't just break trend, correlation, whatever, after like a year now of like 90+% correlation. Then probably tech is either going to have a big push to the upside and get where it should be, or crypto is going to have a big push to the downside. And this was just whoever pumping their bags or trying to exit liquidity, etc. So Solana had a little news come out here. One of the group members actually posted up like the tweet and the timing and all that stuff. So a lot of times, we talk about this all the time, you can see essentially news correspond with price action. So, what was the news? Potentially that Google Cloud was partnering up with Solana, pumps to the upside, instant like 10, 12% move up here. And then afterwards they say what the partnership is, and it's like, oh yeah, we're going to be like running a node. And it's like, wait, what? You're going to run a node? Anybody could do that. And they're like, yeah, but we're helping with security. And they're like, that's what the fuck it does. So obviously the market didn't love that, gave back the entire move. But really, what was it though? You don't have to show me the news. I don't have to see the tweet. I don't have to know any of that stuff to know that, hey, look, we've been setting up as soon as the 821 cross bullish right here. And, basically a back test of the 200s, a back test of that like $46 level. So that's what I saw play out. It was a nice little push up here in line with what we saw from a lot of other cryptos. Now, there was other shitcoins up like 100% in a day. Some things barely moved at all. And then, there's a bunch of stuff in between. But the truth is, I would expect if we go sideways long enough, one way or the other, either the 200s catch up to price action and, we get a back test and potential rejection, a likely rejection, or price action moves back up to 200s. So you can see the way down, we diverged really, really far away from the moving averages. And then we went sideways so long that the moving averages caught up to us. So eventually what happens is, they catch up to us, and then eventually we get rejected and go lower, or we consolidate, break above those, find support, and then start back into a daily uptrend. Which, if that was to happen, that would be beautiful on all these cryptos, on everything. But before that can potentially even happen, we have to get back up above like 45 or so, which is basically at this point in time like a 50% move from where we are now. Now, obviously, we got a little closer with that pump, but that's why you really got to be careful with these news pumps, though, is because usually it is a pump and dump or equivalent, because the truth is, there's no news that's going to change the overall sentiment of the market. You might get some sudden buying come in. You might get some algos, some bots, some whales, some traders, some whatever. But the truth is, in order for the move to be sustainable, we have to see macro shift in the market. And we know what that means. We've talked about it a gazillion times, what has to happen for these markets to potentially even be bullish. We're nowhere near there for now on most of these markets. So Prague says the NASDAQ weekly chart seems to have a weekly divergence. Check divergence is confirmed and play it. Go over here to the you said on the weekly chart. Yeah, I mean, it was setting up for potential bullish divergence right here. I'm assuming that's what you're talking about. Did you say bullish or bearish? Seems to have a weekly divergence. How to check if divergence is confirmed and play it. So we saw the divergence already play out in like the Dow Jones, obviously with that bounce and everything. The question is, did we see actual divergence here print, and has it or is it about to play out, etc. So we see here a low, then we have obviously a lower low on price, and then we see here a low, and then we have here a higher low with 2 green histograms, which is normally what I use personally to decide if we've had enough of a move that we could start saying, hey, there's potential. That was a bottom, that was a swing. Now we could easily do this where we put in a red histogram, go lower, and then put in a lower low. So that's always a possibility. But right now it looks like we had some bullish divergence, and then arguably, over the last couple weeks, it was playing out to backtest support. The question is basically, are we going to see, if we see 1 or 2 more green histograms, we're probably going to get a nice big move, bullish divergence pop back up to like, 300 to backtest it or something like that. If we see red histograms continue to form and weakness, obviously that was an extremely weak close right there. But if we see that continue to happen, we see on the stochastics here, there's no sign that we've bottomed on the stochastics. I mean, this is angled powerfully to the downside, and arguably we're at the same low. So unless this suddenly pivots back to the upside, it doesn't look to me like an actual low. And then the same thing right here, we have 2 green histograms and then it flips red. We want confluence between these two things. So there looks like there was potential bullish divergence ready to start playing out here. Here we see absolutely no signs of that. Matter of fact, it looks like we're about to take out the low on the stochastics, and then we'll just have a lower low on price and a lower low on stochastics, and no divergence. It'll just be convergence, confluence. It'll be a ditto. So in my opinion, there's not enough here right now. If anything, you had to play. I mean, even if you played off 1 histogram, there was no move follow up here. So there's really just not much. I mean, there was definitely signs of it on the NASDAQ, but I mean, look at it compared to what happened on the Dow Jones. I mean, here we have this low right here on the Dow, and then we come down here and put in, well, I mean, technically, oh man, it's like, I mean, it's arguably the same low or slightly. It's tough. I mean, there was definitely some potential divergence between like these points here. There was potential divergence between these points here, and then is this the initial pop off the initial divergence? And then this is just a double bottom type scenario. And then we get the pop. I mean, arguably you would say it was that bullish divergence playing out on the weekly. And again, we talked about it a bunch in real time, but here we have a low, here we have a lower low on the weekly. And we see here, we have that low and then a higher low here, and we see only green histograms. So it doesn't even look like it's rolling over even after that weak low candle. On the stochastics here on the weekly, we have a low, then a clear lower low, and we see the stochastics have actually turned back up here. So this is the difference between the divergence actually playing out and a bottom that's confluence like on the stochastics and the histogram versus what we saw on the Qs. Where one is telling us, hey, this is probably like at least a local bottom. And then, the stochastics like, nah, we're probably just going to keep melting down. But I would be real careful, because if one thing is saying something and the other couple indexes are saying the opposite or just not giving us a clear sign, probably, the majority of them are telling us the truth. So now I do obviously give extra weight to the Dow and the S&P because they're more likely to be reliable. But yeah, I think that's it. Basically went through everything, trying to keep it pretty quick here. Yeah, for sure, man. And the best case scenario always, Parag, is having everything tell us the same thing at the same time. Like, we want to see a super low knife stab. We want to see divergence on all our indicator oscillators. We want to be at like a clear horizontal support. And then that's when we have the most confidence for success in our trades. And then obviously if we're trading with the trend. And then when you see like one thing telling you, hey, this might be going on, and then something else is like, nah, it looks good, and then could kind of go either way, you can't really take those trades with much confidence. Doesn't mean you can't take them, doesn't mean they won't be profitable, but they're going to have a higher percentage of failure rate. And essentially the goal for me is to just try to get the highest probability of success, but still be entering like regular trades. Like, I don't want to have, 2 trades a year, but they're both awesome, but I only have 2 trades a whole year. Like, that's not enough trades, because then you just have a bunch of capital sitting on the sidelines. But I also don't want to trade like 20 times a day So it's all about like that fine line between, you know, and typically the more confidence you have or more probability of success you have in a trade or the bigger your edge is, the more likely it is going to be to succeed. So the more likely I am to deploy capital. But I don't just say like, hey, I'm going to go like 3 lots on this one instead because I'm super confident. I still trade the same lot size. So regardless of my confidence level, you know, if you're dividing up your trading account into, you know, 10 pieces and each piece is going to be a position you put on, I'm not like, oh, I'm really confident in Bitcoin right now, so I'm just going to go all in. No, I don't do that. Or I'm like, oh, this, occasionally if something looks a little shaky, but I kind of like the setup. If it has a good, like, you know, risk reward, but the probability isn't the best, sometimes I'll do like a half lot or something like that. So like, you know, if I was going to take like $1,000 account and divide it up into 10 $100 trades, maybe I would just put on like a $50 trade and then see what happens with it. And then I could either add to it if it looks good or, you know, take the L if not. But, you know, again, it's all up to you. It's all up to building your own, you know, trading plan. I just try to lay out the basics. And in my opinion, you know, the main pinnacles, the most important things you can have is probability of success. How likely are you to win the trade? You know, risk reward. If you win the trade, how much do you win versus how much you lose if you're wrong? You know, higher the better, obviously, on both of those. And then position sizing, I try to always keep the same. And then after that, you know, make sure you got your take profits, you got your stop losses, everything. You stick to them, you know, psychology of the whole thing. But, you know, that's a solid foundation. I think the number one thing that most people miss is like measurable levels. And another big one too that people have difficulty with is, you know, basically taking accountability. You say, oh, the market fucked me. It's like, well, no, you just made a bad trade. Because if you took the other side of the trade and it went against you, you would have been a winner. So whatever you did was wrong. So just fix that. You know, instead of trying to build a case for why like the market's out to get you and like you're never like get the easy trades or whatever it is. You know, and that's where like kind of the psychology comes in. And I think the best way for accountability is keeping a trade journal. You know, write down ahead of time why this trade is going to win and all the reasons it's a good trade. And then afterwards, write down if you were right and if you were wrong, and then try to figure out why. Hey, I was right because everything pointed in the same direction. I had tons and tons of confluence. Or, oh, I was wrong because actually I was kind of reaching on this one. I hadn't made a trade all week. You know, I got rent due, you know, and then you can start saying, oh, wait, hang on a minute. I'm putting unfair expectations on myself because, you know, I'm trying to make rent with this money or, you know, whatever the situation is for you that's making you pressed. Or I was bored and had a couple drinks and just felt like putting on a trade. Well, that's fine. And then you could learn, hey, that's not a good idea to do in the future. Or maybe it is. And you're like, that's my edge. It's, you know, I have a couple of sips of cognac and make some reckless trade. I mean, if you can repeat it over and over again, by all means. But yeah, that's it. Gonna go ahead and wrap it up there. Hopefully everybody enjoyed the stream. Big week coming up here. Obviously, we're getting close to the end of the year. Looking for that next big trade, that next big trend to see where we're going. The next easy, long, trending trade. You know, money's got to go somewhere. I don't know exactly where it's going to go right now, but we're going to figure it out real soon because there's a bunch of money, you know, arguably record amounts of cash on the sidelines, and it will go somewhere. If not by the end of the year, at the beginning of the year. So we saw a massive trend shift at the beginning of the year this year, or end of last year, arguably. Most people did not realize the shift, did not recognize the shift, were unable to capitalize or even protect themselves. We obviously nailed it. So we're going to do the same thing again and have another great year. So that's it for today. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. And as always, that is the end of our Sunday evening market look ahead. It is 9:05 p.m. Eastern Standard Time on 11/6/2022. And obviously, you can catch us live on Wednesdays for our midweek market update, 8 p.m. Eastern Standard Time, and Fridays for our market weekly market wrap up from 11 a.m. Until undisclosed. But that's it for today. Everybody have a great night. Appreciate y'all tuning in. Let's go ahead and kill this a week, crush it. And that's it for today. Crypto Trend Trader, and I'm out.